This conference will now be recorded.
Good evening, ladies and gentlemen. This is Clueless Day Trading Frank. It's approximately 9:07 p.m. on a very balmy evening because when the temperature goes from 18 degrees to 50, it just feels like sunny Florida, right? It feels like Miami, um, or California or Arizona or whatever, not Texas. Um, Whichever the case, it is February 24th, 2021. Couple of days to go. Um, is this a leap year or is this 28th or 29th? I don't know. Like, whenever the month ends. Um, and then the final month of Q1, that's the first quarter of 2021, will end on March 31st. On that note, welcome. This is our midweek strategic webinar. Last one we did, I believe, was on Sunday evening. Time flies, right? Exactly. Um, Full disclosure, this is purely for financial education, not for any solicitation or advice. These sessions are recorded, uploaded within 20 to 25 minutes directly on the real-time Twitter feed, which is the ultimate source of all my tactical alerts, precision charts, my comments, and everything. A lot of new members sometimes ask me, hey, what do you post? Where's the chat room? My simple answer is, my members don't really like to chat that much. They like to act more. They like to trade more. They like to be independent traders. So we do have a chat room that's directly on the website, but I remember just 2 years ago, whatever, it was very full a lot of the time, but nowadays it's not. No problem with me. Any quick questions, you just DM me directly on the Twitter feed and I answer back right away. On that note, let us begin. It has been another extremely volatile, monumental week, but a lot of the things that we analyzed, forecasted, and had 1 or 2 days of quick ambushes, but by the end of the day, the markets were rocking back up, what we call reflex bounces of extreme oversold conditions, extreme capitulation, extreme mental despair on the part of retail emotional traders. And this is what happens. The Dow Jones Industrial Average hits a new high. The NASDAQ climbs back sharply. S&P 500 almost kissing its all-time high. And this is what happens. So there's nothing that I need to prove. I just need to track my charts, keep a very unemotional, robotic mindset, take advantage of positions which are manipulated by algorithmic high frequency trading funds, and whatever the case may be, those big sell programs, institutional sell programs. I do a lot of Twitter broadcasts in the middle of the day to keep you all appraised on what's going on. And I hope you find that helpful. Well, it should find it helpful because those are the facts, not the fiction. Okay, we speak straight here. This is not the fake news trading service channel. All right, no one's going to give you some BS answer or some explanation just to make you feel good. We're not in the business of feeling good. We're in the business of making money, and we do quite well on that front, despite very difficult circumstances in the market on certain days. Keep in mind, and keep staring at this in the back, all right? These are the bulls, these are the bears, and everybody's asking the same question. Where's the top? Where's the top? Where's the top? When the majority keeps on asking, is this the top in the market? Well, the market hasn't topped. When people stop asking, it's when the market actually tops. That's what we call the end of Elliott Wave 5. Technically, yes, we're quite stretched out. But guess what? There are so many stocks out there. And the major index, the NASDAQ, the QQQ, the NASDAQ 100, and the techs, which are well off their all-time highs. Apple is down 15, 16, 17%. And so many of those other great stocks are. So that's what happens, all right? Behavioral finance. Okay, so key is that we have a rolling, grinding move higher heavy, intense volatility, I believe that most human traders get quite frustrated, sometimes in a state of despair, like this is too much, I can't take it anymore. And from a behavioral standpoint, those are short-term market bottoms, which we saw over the last 48 hours. From a technical standpoint, I knew this reflex rally was coming. And as long as you were selective, you caught a lot of the big monster winners, both on the swing trade side as well as on the intraday day trading side. Swing trades these days don't last for 3 weeks. They last for 3 days. So what I'm trying to impress upon all of you, okay, and I'm pretty exhausted, believe me, okay? You can hear that in my voice. What I'm trying to impress on all of you, fine ladies and gentlemen, okay, is that embrace volatility. Study your own charts. Study the tool on my tactical charts, which are extremely precise from a technical levels, where they're going to bounce from, what the Fibonacci levels are, blah, 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 and so many other things. I don't try to make it difficult for all of you. I should try to make it quite easy for all of you to visually look at and understand. Don't make this business that difficult. It's actually not. The biggest difficulty in this business is to have the patience, the mental fortitude, which 99% of human traders do not have. The patience of technical discipline. You all know that. You all know that. And I have the numbers to prove it. So the fact is that don't make this more difficult than it is. The algorithmic high frequency trading robots, which you have heard me say thousands of times, are in the business of making your brain like jello. And don't tell me that it doesn't feel like jello certain days. Of course, that's their business, to get you out of your position and then run it up like a monster within a few hours, if not within a day or so. Look at what happened. Today's the 24th. Look at what happened between 9 a.m. 23rd, which was yesterday, Tuesday, and today. So anyway, do what you guys need to do, okay? I'm a perpetual passionate student of the markets. The reason I can say these things with a level of high confidence is because I have seen it happen over and over again, and nowadays it happens a lot faster. So either you embrace volatility, either you become a tactical trader in between your own, or your own knowledge and feelings about a particular stock, the fundamental side. Either you become that, or else this market will chew you up and spit you out, as it has been doing. And I know many of you at the same time have done very well. I know that. Either it's a DM, I know the people do well. Okay, so that's it. So where's the top? We don't know what the top is. Could be a lot higher. But I know one thing, the top ain't a lot lower. We could have quick 5%, 6% correction. We had a 5% correction in the NASDAQ within a matter of days. On the biggest cap stocks, the real growth drivers in the US economy and the global economy, the big cap tech stocks. The overall indices was down 5%. That's a lot. Okay, that's it, guys. End of the webinar. Nice meeting you all tonight. Okay, let's see here. Let's try to get this out of the picture. What's going on? Where's my mouse? Okay, let's get this out. Let's get this in. So basically, if you all remember, just on Sunday, whatever, and Sunday, I believe, was, what date was Sunday? Sunday was the 21st. So 21st was here, right? This was the 18th, 22nd. So somewhere in this range, 19th. Where is the 21st? Okay, right here. Right here. Okay, it still looked like a bull flag. And this is what the markets did. Monday, Tuesday, and today's Wednesday. So it basically did pretty much what I thought it was going to do, except it took a nice little ugly detour on the out there in the mountains, right? Exactly. 1 second. So you have, and then it created a beautiful pattern, and that's called a 1 second. Let me go back. So these lines were drawn. Let me start off with this. Here was the big breakout. Here was the big breakout. Page unresponsive. Why? Exit page. Oh shit. Hold on 1 second. I don't know why it's doing this. Uh-oh. Okay. Bear with me 1 second. I got to pull this up again. Sorry about that. Not my fault. Another thing is I'm pulling up this chart. Other thing that I want all people to understand is that don't always ask for simple answers. Don't always ask for simple answers like, oh, why is the market down? Like, there's a lot of moving parts in the market. There are global funds, there are this and that, and what looks very simple is not always that simple. Okay? And somebody could be right 1 or 2 days. There are different ways to skin a cat. One way to skin a cat is you buy the technical dips and have massive reversal patterns. One is to short and be quick enough. You're going to be very quick within a matter of hours, if not a day, to cover your shorts. But net, you have to look at the overall directional bias of the market. And this is a 1 hour chart. This is actually a trader's chart. So as long as the overall directional bias on the market, it's very simple to understand, is uptrend is intact, and we'll look at that chart too, the daily chart and the weekly, is still moving higher, then you want, in my opinion, and it's just me, everyone has their own style, then you want to buy the technical dips. Either on the indices, the SPY, the QQQ, the IWM, the DIA, which is the Dow Jones Industrial Average Diamonds ETF, the DIA. We haven't traded that in a bit. I should start doing that because those are pretty cheap and they really move because the Dow Jones really moves. So, or you can buy some selective stocks. Now, here's the problem with here's the problem with individual stock options, which we do a lot, is that the markets could be up 500-600 points, but your stock could be down. Could be a sector rotation issue, could be an analyst downgrade, could be a kind of mild to soft earnings, whatever the case may be. So you don't have individual stock risk if you're trading the indices. Very simple to understand. So just do whatever you all need to do. So this is the 1 hour chart. You see what's going on, very defined. Here was the breakout level back on February, beginning of the month, beginning of the month because we're still in February, and pretty much we came back, we retested that, we created a nice little long tail hammer candle, and we zoomed. And at this point, we are at this neckline here. There's going to be a little zigzag here, and then after that, the markets will attempt to go kiss the all-time highs. And at that point, there will be obviously some sell programs, and we shall see what happens. If everything goes right with the stimulus bill and everything, then the market will basically go, based on this particular chart, to S&P will go to 4,060. Okay? So that's about 100 points higher. So that's roughly about another 600 to 700 points higher on the Dow Jones Industrial Average. If everything falls into place, which it never really does. But let's say we get the stimulus bill, and I still believe that March we're going to surge higher, have a quick correction. But Q1 at this point, 90% plus of the S&P companies have reported they've beaten by a huge amount based on the analyst consensus. So if markets, one of the major components of the stock market is obviously earnings. So if somebody's looking at earnings, there is nothing to blame. Nobody said everything's going to be crap going forward and all that stuff. Okay, but there are risks involved. The Treasury bond deal moving higher, approaching 1.5%, competing with S&P SPX bond deal. I mean SPX yield, which is around 1.52 or 1.53%. So all kinds of stuff. So there are other factors involved too. But I'm just basically saying that if things are under control, then we should basically blast over 4,000 S&P 500. Just remember that. I mean, just keep that in the back of your mind. And of course, I'll be posting these charts, and we'll see what happens. This is a short-term chart. Let's look at the daily. The daily chart is very bullish. I asked all of you the other day what this looked like. We had, did it look like a bull flag? Yeah, it is still a bull flag, and that's a bull flag with 1, 2, 3, 4, 5, 6 days of consolidation. Perfect bull flag formation. Okay, right there, and then bang. There you go. So it's a bull flag breakout heading towards all-time highs. It's a very short-term prediction. This is your longer-term chart. So far, technically, we are buckling a bit, obviously, because some of the big cap tech stocks, Walmart got creamed the other day, Home Depot and Lowe's really didn't do much. So obviously, those components are slowing down things. But look at this bull flag. Perfect. Okay, this was back in end of January. These are all bull flag consolidation, and every single time that these things happen, like 3 or 4 days, 5 days, 6 days, this was one of the longer ones. Okay, every time these type of things happen, you hear the same old story, song and dance. So I'm not here to remember. We need bulls and bears to run this market. Not if everybody's bullish, this market's going to crash like 3,000 points. And if everybody's bearish, the market's is screaming buy opportunity like it has been certain times in the past couple of years, including the most recently in the COVID crisis back on March 23rd, where everybody got bearish. Okay, so we need bulls and bears, and that's a good thing, and that's a very good thing. So I'm not here to debate that. I'm simply saying technically the bull flag is intact. Let's take a look at the Dow Jones, the QQQs. All right, here lies the biggest opportunity. Here lies the biggest opportunity, in my opinion, because I love great American tech companies. They're fantastic. They have great management. And the biggest catalyst to this is, and mark my words, it will happen, is some sort of moderation in the tech trade war we are having with China. And believe me, it's coming. And these things will move. The NASDAQ will literally, technically speaking, it's going to the upper gap. Apple one day wakes up, some sort of news comes out, whatever, up $5. The NASDAQ, the QQQs will hit 327, like no problem. Okay, so this was a severe correction. And the beauty is that it created, from a technical standpoint, let's keep all our emotions aside. From a technical standpoint, it created a massive W formation, which we call dragon bullish. And you can see that here. Let's try to change the color. Now, people who are more technically orientated, they look at the market as a matrix, not just price and volume, what this guy's saying, what that other guru's saying, this and that. They look at market in a very structural way. They recognize pattern symmetries. And they say, okay, remember that old saying, I say that back on my days in Wall Street. I said that many times here. Every crisis is the same for different reasons. The behavioral action of the markets is always the same. Doesn't matter what the reasons are. Okay, same thing applies in life. So the bottom line is, when I look at this type of large corrective moves, I get excited, because this tells me, in very simple terms, both from a technical perspective as well as a fundamental perspective, that we have a lot more upside to go, including this gap fill, where I think eventually the markets will land up. It's a long way off. A lot of money went into the reopening trades, some of them that we are doing, like United Airlines, like Boeing. Look at Boeing. The call's expiring tomorrow, up 1,242% by the end of the day. They went from 76 cents to almost $10.50. Can one of you actually stand up and said you actually had it? Because I did tell people to buy it. And I also told people to buy the March 5th 220 calls, which also were up, not to this degree, because this one, the time value is almost gone. It just ran with the intrinsic value. Did anyone have them from $1? Forget 76 cents. That was yesterday. From $1 or $2, it went to 10. Did any of you have it? And I showed Boeing. I've covered Boeing. Just asking. Anyone? Exactly. The non-responsiveness is actually a great sign for us who are bullish from a sentiment standpoint in the markets, because none of you got it. And that's terrible. But it's great news, because that means there's very low participation by you very smart people, by the way, who I've shown the Boeing charts, all that stuff. You have looked at the charts, you have agreed, yet you didn't participate. What a shame. But very bullish for the markets. Okay, and now I told people to buy the 240 calls, moving up from the 220, and you look at Boeing's chart, this baby is going to go to 240, 244, and eventually 255. Exactly. It's a picture perfect chart. We'll look at it in a second. So anyway, look at United Airlines. The calls were dirt cheap just about a week ago. United Airlines, UL, showing you the ones expiring tomorrow, for example, the 50 calls. They were like a buck, whatever. They went to almost $6. Now, even if you zigzagged your way but kept some sort of position, either on the ones expiring tomorrow or the ones expiring in March, you'd still make a lot of money. Did anyone make money on United Airlines over the past 48 hours? Even on Monday, United Airlines ripped like a mofo. Did any of you make money on EOL? Can you guys hear me?
Yeah, I did. I took the UAL trade.
Good. One person. That's also another piece of fantastic news for us bulls, because most of you did nothing. These are cheap calls, for God's sake. And the chart looked like a big breakout, and then came that United Airlines $7 up, and the continuation pattern. This is very good news, because what's happening is that majority, and I'm not talking you all people, just majority out there, are not making any money of any substance that you deserve to make. Exactly. And that's great news. Low participation in markets by retail traders as well as institutional traders is a good sign that we have more room to go higher. So your loss, because most of you guys didn't even didn't do it, which is a shame. But good news is you still have time to make money. So as long as you mentally calibrate, go for it, baby. All right? Exactly. So good news. Good news. All right. So I like this. This chart, there's nothing wrong with it. Will it zigzag a little bit? Can it pull back, retest the upper end of the gap? Sure, it can. Maybe tomorrow. So, doesn't matter. Doesn't matter. Because when you get these type of chances to buy the NASDAQ down at these levels, see what it does every single time. Every single time. It's called structural pattern symmetry. You don't need to know anything else. Is it a complete guarantee? There's no frigging guarantees. The only guarantee is you're one day closer to death. I know it sounds harsh, but it's true. We're one day closer to death, right? Exactly. Death and taxes, like my good friend Oscar would say. So there you go. Next, let's take a look at the Fibonacci, the Dow Fibonacci thing that I told you. Ladies and gentlemen, don't underestimate the power of money coming in after big margin sellouts, institutional stuff, all that stuff that I keep on talking about, explaining to all of you. You do not get this type of move. Well, a whole portion of the move was because of our Boeing, which has gone up. Well, we'll look at the chart, which has gone up literally $30 in the last 10 days or so. Exactly. And that's despite bad news. Engine falling off at 777, all bad press out there. Boeing, UAL actually grounded a whole bunch of 777 white-bodied aircraft, That's all bad news, right? You turn on CNBC, they're pissing on Boeing. Bloomberg's pissing on Boeing. Fox Financial Network, God knows what they're doing. Maybe they're pissing on Boeing. Okay. And what does Boeing do? It says F you and turns around and goes higher the same day that engine fell off. Luckily, no one died, obviously. That's great. So you don't get these type of moves. I mean, this is a surge. Okay? We actually have a member called Serge from Switzerland. Great guy, great guy. So it's a surge. And here's your Fibonacci retracement that I told you we would go. When it was down here, I drew the fibs from here. And I said we would go to the 50 fib, right? The 0.5. Well, guess what? We did the monkey dance from the 10th of February, volatility dance. And I know it's tough. It's tough on me too during the day. I don't just make up these webinars and say, oh, I'm not a fake trader like doing paper trading. It's real money at play. So it does this monkey dance, creates another significant bottom that it was on the 10th. I showed you this pattern symmetry. And then it goes up, pulls back a little bit, and then it does this today. And this is a 15-minute chart. This is sort of like the more close-up version. Now, where can the Dow go? Well, if you follow the fib, come on. These screens get very glitchy when there are so many screens open and so many charts. It's very data hungry. So what's the next fib? Well, believe it or not, the next fib is 32,567. I'm sorry, 572. Another 500 points higher. 500 points change higher. It can do it. So do not underestimate the power of what markets can do, regardless of how you feel, because how we feel means absolutely nothing. Nothing. Last chart we're going to look at on the market side. We looked at the Qs and stuff. We mostly cover the Qs and the thing. Let's change this and look at the monthly chart. And I just want a quick response from any of you who would like to volunteer. You look at this chart. Let's start off from the bottom, which is the simple MACD powerhouse. Then we look at the full stochastics, oversold, conditions, whatever. And some of you new members don't know what these indicators are. Go to Investopedia, type in, learn what these indicators are. Quick question. And this was a precedential chart that I put out there for you all a few weeks ago. When they say like, oh, under this precedent, nothing's going to happen, blah, 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 blah. Same crap. Okay, so here's Obama after Bush. This was the big housing crash, the mortgage crisis. Here is President Trump. Here is Biden. So no comparison. Has anything changed? Once you look at this chart, can somebody just tell me what, at first glance, what does this look like? Is it going higher or lower?
Bearish wedge.
That's so bullshit. I'm sorry. Is it going higher or higher? Listen, this is a long-term chart. Where do you see the bearish wedge? It's breaking out of the rising wedge. That is as bullish as you can get. But please explain to me, because I would like to know. I'm sorry I said BS. Come on, I'm a New York guy. Like, we talk like this, okay? So please don't get butt hurt, okay? have a thick skin. I tell a lot of my traders, don't get butt hurt because I get in their face, because I love you all, okay? But where is the bearish wedge?
But the monthly hasn't closed above yet.
What are you talking about? It is totally above it.
Well, the monthly candle hasn't closed yet.
Oh, the
For now,
monthly.
it's above.
Oh, okay. So, so you are basing. Who's this? Raul?
It's Ryan Wilson.
Okay, Ryan. Ryan, how are you?
Good.
Are
How
you a
are
member?
you?
Good, good. You're a free trial subscriber, right?
Yeah. I'm upgrading this week though.
No, that's awesome, man. You sound great. So here is my
Thank you.
point here. One of no, I love people who participate. So basically, you're guesstimating because you're guesstimating that this will pull back, right? But even if it pulls back and holds this wedge, even if it pulls back here, it's still a long-term bullish pattern. And one of the things that we specialize in, or at least I do, is I look at the probability of a significant pullback, which can happen. Certain things can happen, of course. There are dark swan, black swan events, all kinds of things can happen. But aside from that, we look to see what the internals, and the internals are, even though overbought, can continuously move sideways on a smoothed monthly basis. And that's what it's telling us here. There are no signs of any crossovers down. So that probably, so when I look at the internals and I look at the external, which is basically the price and volume in the candlestick, it is definitively bullish. But go ahead, Ryan.
I mean, all I saw was just the ascending wedge drawn, and so
Right.
from
So
what I
basically,
read on Investopedia and stuff like that, is a bullish structure unless it breaks above.
and it
Which
has for now broken above, and
there's
let me
still a couple days
finish.
left.
Let me, couple of days left. Here is the point. Our mental our mental whatever you call it, lobes that we have are always geared towards looking at the negative. They are. That's why bad news always makes big money and good news really doesn't do anything. So basically, to me, I look at this and I'm like, shit, man, this is big. So with 4 days left, you're assuming we're going to get a pullback. I'm saying,
Don't get me wrong though. I did buy the technical dip with you though, so I did
no,
buy
I
that
know,
dip.
I know. I'm just simply saying that a lot of other people would look at this. I look at this. I'm just like, I don't want to spend too much time on this, but I agree with what you're saying. I would be negative if I lost the whole body of this candle. Okay, and like I told everybody that we need to hold this the high 3600 whatever on the short-term charts, and we need to hold the 37 and change. But this is a monthly chart, so for whatever reason, if this candle, forget the numbers, turns like a red like this, becomes a bearish engulfing, I'll short the market all the way down to 3500. But there is no indication of that whatsoever. And we will start seeing that if there is a reason to see that. Okay, but
Okay,
first,
cool. Thank you.
no problem, right? And your answer is correct too, just so you know that. Your answer is correct. But I've maybe because I've been in the market longer, I've never seen anything like this. And the best
For
part
sure.
is, that low participation by overall retail traders. When I ask those questions, you had the United Airlines, simple stocks, Bank of America. I'm sorry, not Bank of America. I haven't actually made money on the banks lately. Look at Goldman Sachs. Holy shit, it was up 13 bucks again. I'm missing out on the banks. I'm the first one to admit. I used to play Bank of America and Goldman Sachs and JP Morgan all the time, but I can't play all of them. So, but that's awesome. So, and then people say, no, I wasn't in Boeing, I wasn't in United Airlines. Yeah, I made a little bit of money. That shows low participation, and that's great news for the bulls. You get high participation, everybody raises their hand and says, yes, I made a lot. That's when things stop. So anyway, the longer term picture looks fantastic. All right, now let us dive into the ultimate blue chip what's the ultimate blue chip company in America in play as we speak? I'm being sarcastic. It's called GameStop. All right.
Let's go.
Yeah, baby. All right. So here's my question. I saw GameStop moving over the last couple of days. Kind of like, I mentioned GameStop on my previous webinar too. I said, we're going to get another spike. We will. And we're getting that now. And we still have room to move. And this is a guy who we shorted GameStop, did decent. We were long GameStop, 8, 10, 11, 12 bucks. Still did decent at that time. 20, 30, 40. I think the lowest last sell was like, and then the absolute bazooka higher. So let me try to put this here. So I put out GameStop. So I've been looking at it, not really monitoring it. How is it I see it really starting to move today? So I told you all to buy GameStop, and at that time the stock was somewhere in the high 60s, maybe 72. Because they kept on halting it. So some people say, "Oh, it's too risky for me." So let me ask, and let me give you a strategy of risk mitigation, and still make a few money. Here's risk mitigation. Forget buying the calls. The calls I have on my screen are the 64 calls. They were 56 cents this morning. I didn't see that 56 cents. I saw it when it was like $6, $7. So I'm thinking, and by that time the stock was in the, it was actually one of our great members, Dominic Santiago, who DMs me. He's a great frigging trader. The guy's like, he nails a lot of my stuff. He's got the patient discipline. Giving me a huge shout out. You hear his feedback once in a while. I put it out there. That does really well. Yeah, he loses a little bit here and there. So, but he has the patience. He follows the charts. He's really great. I see some of his returns. I'm like, holy shit. And those are my alerts. And anyone wants to talk to him, trust me. He's a very balanced guy, owned construction business with his father, successful. I got to give hats off to him, man. Not just because he makes money, because he's so disciplined in his own way. And that's what most of you and me sometimes lack. Okay? Anyway, and he does small caps. He doesn't do that much of the big caps. He does the small to medium cap stocks. So he DM'd me, goes, "Frank, this thing's starting to perk up, man. Take a look at it." So I looked at it. It was like 40 something. It starts to move because GameStop started off this morning at 44.70. So when he came in with his DM, it was around 55. So I looked at the 60 calls. I looked at the 64 calls. So man, $6-7. Yeah, You know where they ended up by the end of the day? And this is the options part. This is the risk part. They ended up at the end of the day at 31. And this is when the stock GameStop closed at $91.71. After hours, it went to 200 exactly. And right now, the last print at 8 p.m. when after hours trading ended was 168. So here's risk mitigation. While you can still make very decent sum of money, forget the options. Why can't you buy 5 shares? When I told you all to buy, it was 60 to 70 bucks. Let's call it $70. You know this is a monster when it starts to move. This is not a real chart play. Now it becomes a real chart play. But, it's a frenzy. So why can't you buy 5 shares? That'll cost you $60, 5 shares, $300. After hours, you could literally have sold it between 150 to 200. You could have made 500 points on 5 shares for $300. You've almost doubled your money. What if you bought 10 shares? It's not going to kill you. So this talk about, oh, it's so risky for him. What are you looking to do? Marry it for the next 10 years and have babies with GameStop? You're looking to rent it and play the frenzy. And there's some other stuff going into GameStop right now too, which the news is going to come out. Is the stock trying to be a fundamental analyst? And you say, oh wow, this stock is this is a longer term picture, but this stock is. So a good friend of mine said, it's too risky for me. It gets halted all the time. When there's a frenzy happening, and this is the favorite of the Reddit boys, and that guy, what's it called? Cute Kitty or Kitty whatever? He's the biggest GameStop guy, right? Hell, what is it? What's the name? Hello Kitty? What's his name? The guy who
Kitty.
Yeah, Roaring Kitty? That guy
Roaring Kitty.
I heard it. Roaring Kitty, okay? So Roaring Kitty, the day after his testimony, and I liked the way he talked, man. He said exactly the same thing I was talking about months ago. The reasons why he bought it and stuff. Except he had the balls to hold it, and I didn't. And he took a lot more risk too. But you know what he did right on the day of the testimony? And the stock was vacillating around like 40 bucks, whatever. He bought another 100,000 shares. You think he's really that stupid? I don't think so. Is he a risk taker? Or does he truly believe in the GameStop revolution, which I believed and I still believe? Do I think the stock should be here at 200? No. But well, who the hell am I supposed to say? So here's the risk mitigation part, guys, and listen carefully, please. I'm trying to help you all. Buy one share. At least you make frigging not just lunch money, frigging steak dinner money. Okay? Buy a few shares. Options are tricky, I understand. They don't adjust it a lot of the times and this and that. But when there's a frenzy involved and it gets halted, what do you think is going to happen with the halt when everybody wants to buy the stock? It's going to open up and go. And that's exactly what it did. It got halted at 71, opened up at 90. Exactly. 85, 90. Yes, and it moves like $5, $6, $7 like within seconds. So what? If you have a few shares, you can blow up for 20, I don't know, 30 points. And this is going to happen. GameStop is special. That's the reason why it happens like that. It dragged up AMC. That same Santiago, he's into AMC. He kept on telling me, hey, man, you got to put the stock out there, $7, $8. I'm like, AMC closed at almost 12, 11. Focus on one thing at a time. We had a huge winner last week. I forgot to mention the webinar on SOS. Sold it all the way up towards the $15 level. Stock pulled back. So that's what I'm saying. Don't sit there overanalyze. For God's sakes, you guys are traders. You're not sitting in I'm not going to pick any country because somebody's going to say he's a racist. But you're not sitting in some really impoverished third world where you can't afford $200 on one of the hottest stocks in play in the United States of America. Jeez. Okay. Now we look at the technicals because now the technicals are kind of starting to look. Now I do have a chart which I posted.
Wait, Frank.
A few times. Yes, go ahead, sir.
Are you in just shares or calls too?
I'm in shares and calls.
Oh, sweet.
And I sold. And I sold a bunch of shares. Believe it or not, I have the print at 198. At 198. That's part luck. But the reason I sold it, just so you know, and I still have a bunch of shares, okay, is because 200 is a round number. 100, 200, these are round numbers. So once it hits there, within 3 seconds, it dropped like 25 points because a lot of sell orders went in at the 200 level. Now, my question is, your question is, should be, it's not what I do, it's what are you doing? Exactly, all right? So this is what is going on from a technical standpoint in GameStop. And I did have, I've shown this chart before, but let me explain it on the larger screen. This stupid screen. So what I'm simply saying, the reason I wasn't really scared because I started off with just a few shares and they started to go nuts. So that's when I jammed more. You ride the wave. Don't be scared of a halt because you know something that's not going to happen? Robinhood, after getting smacked from every single front, okay? Vlad, the one who looks like Garth, okay, is not going to halt trading. Not the second time. He does that, he's going to lose his company because all these guys are going to leave Robinhood. They're going to say, that's it. You screw us once with the halt like they did. Second time, see you later. They're all going to go to Webull or TD Ameritrade or whatever other platform. Exactly. So they're not going to halt this stock and screw people. So a halt on a very sharp move, and not just in GameStop, other stocks too, means that it's going to gap up, not gap down. On the way down, a halt means that when they remove the halt, People are like, oh my God, I got to sell. And you get these gap downs. It's very simple common sense. But on the way up, a gap halt, a halt means that it's going to go boom. On the way down, a halt means it's going to fall because it's just human behavior. You're like, oh shit, I got to get out. This thing's going to zero. Exactly. Now, here is what I had drawn way back, and I'm going to, okay, so let's take a look at this. And this is just my prediction. I've been trading this stock for a while now. Here was the bottom, 36.05. Did tell you guys it was going to go to $30 to $40. Said that repeatedly. And those calls actually worked out. Not as great as I thought it would. 1 to 3.5, $3.60 doesn't really excite me. 1 to 20, now you're talking business. So you say you have a completely symmetrical triangle. Okay. Hit the 36 mark. Pretty much did. 37, 38, I don't know, whatever the low was. And now we have a fat bullish engulfing candle on massive volume. You're talking massive. And today's the first day of the short-term mania that just started. Technically speaking, when you have one like this, you might get a little pullback, but as long as the body of this candle stays intact, and we have a little red sort of marker right next to it, maybe the stock's down like $40 tomorrow, whatever, which we easily can within 3 seconds, right? But as long as that's an inside day, and here's your 50-day moving average on GameStop, $58. As long as $77 holds, even $60 holds, it's going to bounce, and it's going to bounce hard, because the next round, the fast traders, the risk traders, the complete GameStop is my God traders, okay? Hello Kitty traders. I love saying Hello Kitty. So I'm going to jump in hard. Technically speaking, if this was not a Reddit stock, this is a very powerful formation. So what's the next stop? Well, first level is right here. This is where the stock was at 113, and then it had a massive. That was the week of February. That was the week of. Why is this? Ladies and gentlemen, 1 second here. So that was the week that the stock peaked, right? End of January, right? Went to 483. Actually went to 500 and change pre-market, didn't it? Anyway, so I'm looking at this level here. That's 110, 111. Well, we're well past that, because this is not adjusted to where the stock is. So where's the stock right now? I'll show you. It went to 200. Here's the downtrend line, 200. Now somebody might say, 1 second here. So 200 was also, all I'm saying, I'm never going to push GameStop. Okay, this is a risk trade. I said active traders only, but please don't come and tell me like, oh, it's so risky if you're going to buying 5 or 10 shares, which you can make thousands of dollars on. Exactly. That's like a BS excuse I ever heard one. Now, here's your 20-day moving average. All that is blown. The stock is right here right now, somewhere around 170. Okay, after kissing this, it pulled back a little bit. So where do we see this going? The next level, all I did was look at the inflection points where the stock either bounced from or fell from. So the next level is 248. The stock actually went to 500 plus. What is a 50% Fibonacci retracement of 500? Can somebody tell me? What is a 50% Fibonacci retracement of $500?
250.
Thank you very much. 250. I think this stock in a weird way is starting to follow technicals. I think it goes to 250, 248, and it's going to happen very quickly, maybe as early as the first hour of tomorrow's trading. And do I think that it can sustain itself at 250? Nope. Am I going to go nuts shorting it? Nope. Because I don't know what the short position in GameStop is right now, but I know it's not that, like the crazy 140% excessive over shorted stock. But it's still pretty high. It's still pretty high. Exactly. So bottom line is, this is not a technical play. This is obviously, it is a technical play on the longer term. But please, like I said, you guys do what you need to do. You can trade the 15-minute charts if you're that quick. This is the level where they would enter again, which is 132. It could drop to 132 right at the open because somebody says, oh my God, I'm up that much. I didn't see my phone. Okay. One thing I do know, that Robinhood won't F up this time. And that means the halts will be minimal. And what are they going to do? Come back and try to slice a trader who's buying a stock at free will? Exactly. So that's basically it. All right. This whole bunch of stocks, and I put it out there on my Twitter feed and stuff. So let me ask you guys, what do you want to look at quickly? Because I want to end this in the next couple of minutes.
Hey, Frank, it's AJ.
Sure.
Can you look at Schrodinger for me?
Sure. Schrodinger, I have the most beautiful chart. Oh, I forgot to show Boeing. Of course, Schrodinger is on my other platform, which is Quad. And here it comes. Here it comes. Who's this? Ryan?
It's AJ, Frank.
Hey, AJ, how are you? Schrodinger
Good, how
moved
about
up.
yourself?
I'm alive. So that to me is a blessing. Okay, I'm doing well. Okay, this is Boeing. Let me cover this and I'll show you. Schrodinger is right next to Boeing. Don't worry about it, baby, all right? Look at this chart. Can somebody come over and piss on me and say, Frank, you suck, man. You told us to buy Boeing at 140, 150. You told us to scale up on the strikes. Come on, guys, please. Isn't it time to grow up? This is a high-risk stock. This is a high-risk stock. This is one of the best technical formations I have seen on a big cap stock in a long time. This was the pullback everyone freaked out. That was a bull flag consolidation. The bears said, oh, Boeing's going to go down and crash. I told you guys that Boeing would hold, and I don't delete my webinars, right? Exactly. Pull it up and listen. I said it's going to be somewhere between 185, 190. That was a gap fill. And see you later. And this happened today. And the calls went up 1,200%. And the others went up 400, 500, 600%. If you were a little bit, if you're into the March calls. So may I ask a simple question? Who owns Boeing here?
I do.
Me,
Okay, aside from Mike, who owns Boeing?
Ryan Wilson.
Good, good,
I bought all the airlines. Dell, Save.
awesome. All reopening trades. And Boeing is also a China trade. When this Chinese trade talk moderation stuff, as it is happening right now, they're talking under the table. That's what diplomats do. The first beneficiary.
Frank, there
aside
was
from
brand new news today too.
What is it?
Let me read it. It says Boeing Airlines in Southeast Asia to need 4,400 new airplanes valued at $700 billion to support expanding demand for air travel over the next 20 years. First squawk.
And this is directly tied to Boeing airplanes that Southeast Asia needs to buy.
Check the chat. That's the tweet. First squawk.
Awesome. So this ties in Southeast Asia. Well, China's in Southeast Asia. So, and once that happens, first thing they're going to buy is Boeing. Another stock that I've been missing on, I keep on slapping myself every day, is John Deere. They're a huge beneficiary. So when people ask me, where's the top? Well, why don't you ask John Deere what the top is, or Caterpillar, or AGCO. So Boeing's chart is fantastic. This is the daily chart, 260. Forget the weekly, it's going higher. SDGR, absolutely gorgeous pattern. This was a stock that we have traded repeatedly as it climbed higher. It has sharp pullbacks on certain days. The uptrend channel is intact. In my opinion, the stock is somewhat overbought right now because it almost hit the upper end of this rising uptrend lines, uptrend channel. Look how picture perfect this chart is. Almost hit that 121 level, actually hit like 117. A swing trade, want to hold the stock long term, AJ? This is your baby. I don't know. I don't have time right now to look it up when their earnings are. Their earnings will also be a determinant, but they are one of a kind. They are one of a kind. So long-term uptrend intact. Short-term, there's going to be some digestion. I would be a more aggressive buyer on the stock on the lower end of the channel, as was the case yesterday. I would be a very aggressive buyer of the stock based on how my structure how I've structured the chart at around $99 to $100. If you hold it, you have nothing to worry about. Any question, AJ?
Thank you very much, Frank.
No problem. No problem. Like they say, one of a kind. All right, something else, please. Let's take a look at this is
SOS.
SOS. We did very well on this stock. And if you look at here's SOS. Let me clean this out. What a move. We rode the nice wave. This is the last couple of days. It's consolidating. In my opinion, SOS can be bought here. SOS can be bought here. I did ask people to buy it. I think yesterday. I can't remember. Just come on. That's a pivot line 8. SOS, in my opinion, is, well, you know that it's a Bitcoin play, right? So as long as Bitcoin stays between 45 and 55,000, SOS is a-okay. Also a China play. Technically speaking, it's a screaming buy. The slow stows are just turning, but it's a small cap stock, so the technicals don't have that much determining factor. It's not weighted that strongly, right, on the technical side, because it's more of a small cap stock that a lot of fast speculative traders trade in. But if I had to draw a quick thing, I look at this as a 1 second. That's a falling wedge, and SOS, in my opinion, will go higher. Bitcoin is here to stay. Now it's been established. We all know that, right? It can have 10 to 15% type of correction, but it's here to stay. So on days that Bitcoin's down, you're going to find some pressure on SOS. It's still a buy. It's still a buy. It's a cheap stock. And I'd rather go with the stock than the options, unless you want to buy a whole bunch of options months out. That's a different story. But otherwise, don't expect the options to do the, like the big leap forward. Stock itself does the job for you. So SOS is totally fine. That's it. Okay. All right, guys, listen, this was fun. We could sit here all night and talk about so many other stocks out there, but obviously we can't do that. What was the one? Okay, any others before I sign off?
Is there a way we should be playing Bitcoin?
Yeah,
Can you,
the way you can play Bitcoin, buy Bitcoin. I mean, that's one way. The other one is Ethereum, much cheaper. It's like, when I originally mentioned the Ethereum, I think a month or two ago, or less than that, just mentioned as we were talking, Bitcoin was like 30,000 at that time. Ethereum went from 1,000 to almost 2,000. And Ethereum is more of a financial token for financial transactions. So that's one way you can play it. And the other way you play Bitcoin is you play through the Bitcoin miners, the picks and shovels. So there's SOS, there is MARA, there is Riot, Those are the main big ones, right? There's BTBT.
Yeah, is there a symbol that you buy Ethereum with?
You
That
just have
sort
to,
of thing?
yeah, sure. You open an account with a company that deals in cryptocurrency, and then you directly buy, through that. Coinbase is the biggest company that deals in, cryptos. There's many others. There are many others. So you'll just have to look it up and see which company. You need to have an account with them, and then you can buy the Ethereum directly through them. I don't think TD Ameritrade and stuff has allowed Bitcoin buying direct cryptos yet. I don't know. So you can check with that, or you can check with your actual broker, whoever that you trade with, E-Trade or whatever, Mike, and just ask them, I want to buy crypto. What would you suggest? So you can directly, they'll tell you, or they'll at least might refer you to the companies, But I just mentioned Coinbase is the biggest one, and there are quite a few others. So you can buy directly off that. You can buy Cash App at Square. You can open up a Cash App account. Very simple. And you can buy direct crypto through Cash App. So that's the way you do it. It's very simple. Very simple. But always be ready for some volatility on the crypto side, obviously. But so far, so good. All right. That was the final question. Great. Ryan, look to see you as a gold or platinum member. Any questions, just DM me directly on the Twitter feed. Get yourself in, by Friday. What's today? Wednesday? Yeah, 2 more days left. Any question, I'll be happy to answer for you, sir. You sound like a terrific guy. I love hearing feedback, and more, not the feedback, like actual good ideas from other people. So that'll be great, and I'm sure we can offer you something that will be valuable to you. So on that note, have a great week. Nothing more to say. Let's embrace volatility. You got to deal with it. Just got to deal with it,
Thanks, Frank.
And aside from that, I'll do my best on a few things. I can't cover everything, but if you guys have any great ideas, I certainly want you to DM me directly and say, Frank, take a look at this, okay? I like this one. I think it's about to move, whatever. I'll certainly do that for you all, and I'll certainly jump in myself if I think that it's worth the move. So on that note, God bless you all. Get those referrals in. Let's get a lot of new blood in. This is America. There ain't no top, okay? It's a rolling top. We're not in a bear market. Only when the credit markets go crazy and the junk bond markets go crazy, that's when the markets go on a sustained downfall. None of that is happening, ladies and gentlemen, regardless of mildly rising interest rates, if we really look at it. The rate of change is high. It's gone from 0.5%, 0.7% to almost 1.4%. The rate of change is high, but look at the absolute number. 10-year government bond yield at 1.4%? Come on. It used to be 15% back in the 80s. In the 90s, it was 7, 8, 9%, 10%. So 1.389. And that's a sign of good economic growth. And Fed Chairman Powell has said he has no desire to clamp down and drain liquidity out of the US market. That's all I need to know. Him and Janet Powell, they're a power duo. That's it for now. Have a good one. Good night, guys.